Hi, Nico.
Great. Well, thanks for having me. So what I'll try to do is to go through. I have a pretty short presentation, about 10 slides, pretty high level. Uh, I'll try to take like 10, 15, maybe 20 minutes on that, and then we can, I guess, open to Q&A. I think most people actually know BlaBlaCar, but we started as a long distance carpooling app. So essentially, like allowing drivers to share their car when they drive along, and passengers can book those empty seats in those cars, just like they book a seat in a plane or a train or in a bus. And I'll jump to the next slide. Over the next 3 years, or 2 years, I should say, since really 2018, we started to diversify into like a broader offering, which goes beyond this core use case and the unique use case of carpooling that we've created over the years, and to tap into the larger mobility market, or at least long distance mobility market, which made us go into buses, which will make us go eventually into offering trains as well on the platform. So most of the presentation is actually focused on that, really like the last couple of years and the future. So I won't go back to sort of the root and the exciting story of BlaBlaCar in the early days, but really about the transformation we've done over the last really 2 years, from becoming just a carpooling community to becoming more of a multimodal platform for travel. So if you look at where we are in that, I would say, transformation, we still obviously dominated by carpooling. So carpooling, as I described, is fundamentally a C2C marketplace. So it's drivers offering empty seats in their car, passengers booking those seats. So it's a fantastic business in a sense that it has zero inventory risk. So essentially, we don't pre-purchase those cars. We don't obviously buy the cars. We don't employ the drivers that just happen to be like math teachers or students driving across the country with empty seats in their cars. And interestingly, there is also no inventory risk for the drivers, right? So it's not just like you push the inventory risk elsewhere. There is just no inventory risk in this business. Essentially, you just like filling up seats that are empty in cars. The business model is a transaction business model on carpooling. So essentially, we have like a commission on every transaction, and fundamentally, it's a very high gross margin business at 90%. Now, the way we entered into becoming like a broader multimodal play was by offering buses. So we've done that in two different ways. And we've done that in two different ways because the European market is fundamentally different from the rest of the world when it comes to buses. So if you look at Europe, it's a market that actually liberalized, or at least continental Europe, I should say, is a market that actually liberalized quite recently in 2015 and 16. And it was a market where people were not taking long distance coach. They were only taking either trains or carpooling to some extent. And that market get consolidated pretty quickly. So today, essentially, you end up with mostly two, maybe three actors in continental Europe. So we decided to launch through the acquisition of Webus what I would call a virtual operator, where essentially we contract bus companies that own fleet that they either deploy for school or local transport or events or corporate events or whatnot. And essentially we contract them to run specific lines. So we do in that business take an indirect inventory risk in a sense that essentially you sort of prepay specific lines with bus operators, but you have essentially a contract, so you don't own the bus, you don't employ the bus driver, and you end up with a very flexible network, an ability to reshape your network. Yet, it is a fairly low gross margin business model because essentially you pre-purchase to some extent the seats that you resell. So you do take some indirect inventory risk, even though you don't own the buses. Outside of Europe, the way we went about buses is a slightly different game, where essentially those are very large bus markets highly fragmented, very unsophisticated, and mostly offline. So today they're like 80–90% still offline. So it's your typical offline to online play, essentially, where you go in, you build technology. So in our case, we built like a GDS a la Amadeus or Cyber for the airline industry, and an OTA layer. And essentially we digitalize, this sort of like old school bus industry in Russia, in Ukraine, in Brazil, and in the future in every emerging market. So it's really an OTA play, which is very high gross margin as well. So it's 80% gross margin. You don't have inventory risk. Obviously, the carriers do, but essentially you sell, I would say, a few seats in plenty of buses, just like a Booking.com in the hotel industry. Now, the beauty of all of that, so I just highlighted the three legs, I would say, of the business we operate. For an end user, all of that is aggregated within one app, right? So essentially, as a passenger, you just go on BlaBlaCar, you see all this inventory of car and buses. We'll add train at some point, and you just like one click away, one booking away from booking a seat in a car or a bus. So that's a brief summary. I'm assuming you see the slides, by the way. I don't know if it works on yours. Okay, great. I probably won't go back into that. Maybe just highlight a few things about the difference between those different business legs or business model. I think what's interesting is also to think about the market itself. If you look at the market of carpooling, it's a market where today, I would say we created that market and we're very dominant. Like we don't have direct competition on carpooling, whether it's in Brazil or in Russia or in France or in Spain. And it's purely about market creation. So if you ask me, like, what's the market size for carpooling? Frankly, I don't know, because it's about like you're building a better experience and a better matching algorithm so that you can match drivers and passengers. But the amount of cars and empty seats in cars is just humongous. So the challenge here is not like offline to online. It's not like looking at transport data. It's really about building a great product experience, and it's about market creation. It's also very much driven by product and tech. So over time, we went from, I would say, a pretty simple sort of classified type product where drivers would go on the platform, create a profile, and let's say, I'm driving from Paris to Lyon, and I'd like to get 25 euro per seat, to something that's a lot more powered by machine learning, where today, essentially, we are getting to a point where essentially the driver doesn't put a price, puts just a starting point and an end point, and we match the driver in time, in price, and in location. And we define like stops along the way so that the driver can pick up and drop off passengers along the way, and we optimize the price of every subleg. So today it's 25–30% of the matching between passenger and driver is actually generated by machine learning. So we define the pickup and drop off point and the price of every subsegment. And long term, as you fast forward, probably 80%, if not 100%, of carpooling stops and prices will be defined by machine learning and not defined by a driver. That's important because as you do that, you clearly bring the concept of dynamic pricing into carpooling. You also create like a multitude of pickup and drop off stations or virtual stations, if you like, that just create a better network. So that's the challenge on carpooling. BlaBlaBus is an interesting business because it's really a European thing so far. So it's really like the way the bus industry shaped in Europe. With today essentially two actors. You have Flixbus out of Germany, and you have us. We acquired a company called WeBus to accelerate our presence in this market. So it's actually born out of deregulation in Europe. It's a sizable market, but it's actually fundamentally capped by trains because most of the markets in Europe have good and highly subsidized train networks, the like of SNCF and Deutsche Bahn and so on. So it's there is like a pretty large market in the middle, but it's nowhere close to emerging markets. And then if you look at the what I call the bus marketplace segment, the last one on the right, again, it's a marketplace OTA type business model. It's a very large market. So very large market in countries like, again, Russia, Ukraine, all of Latam, India, Mexico, and you're talking about tens of billions of dollars actually of GMV generated by the bus industry in those countries. And it's interesting here because it's one of these rare, maybe one of the unique almost, I would say, asset class in transport that has not gone online in those markets. So people, strangely enough, still buy 90% of their bus ticket in Brazil, in Russia, in Ukraine, in Mexico, offline at the station. Obviously, it's evolving fast. It's changing. The technology to crack that problem is actually not just building like a nice sort of, I would say, top user layer, but it's actually building all the technology stack, enabling actually those SMEs, so this sort of tiny Russian, Ukrainian, Brazilian bus business, to actually digitalize the entire inventory and manage the entire inventory online. So the key, I would say, product and tech block we're building here is actually a GDS. So it's a global distribution system that allows us to do online distribution on BlaBlaCar. So you have like the hidden part of the iceberg is actually below BlaBlaCar, and that's the GDS layer that partially came out of the acquisition of Bus4 in Ukraine and Russia, because they had built like fantastic technology to crack that problem in the region, and we combine that with our own technology, and that's how we are entering the Brazilian market today. So starting from the supply side again, like we have these three legs. Obviously, the two new ones are the bus ones. If you look at the third one, that's by far, so the bus marketplace is by far the most scalable, because the same technology we deploy around buses can be applied to trains, shuttle. Essentially, once you build like a coherent GDS, I mean IMS, GDS, and OTA layer, you can start to connect like essentially thousands of operators on the platform. So today, essentially, our goal is to connect as many operators as possible in as many countries as possible, and combine that with carpooling to have like a highly differentiated offer. So now I talked a lot about the supply side, but I guess if we look at the passenger journey and why going multimodal for us is interesting, it first comes from the belief, and a pretty simple one that most people would agree with, that as you create, or as you have enriched your offer, you attract more demand, right? So we went from just being a carpooling app to combining carpooling and buses. And long term, the envision is really to start combining all of that. And it's interesting when you own a very granular network with carpooling to combine that with other means of transport, because the car remains the universal connector. So if you think of most of the journeys you take by train, by plane, there is very often like a car at the beginning, a car at the end. So the car remains the universal point-to-point connector for most of us. So the end vision is not just to put carpool and buses and trains side by side, but it's really to start combining those modes of transport together. And by doing so, you end up having like very unique offer on your app, not just by carpooling, but by combining those journeys. So that's I would say the unicity of USP of BlaBlaCar. It's really combining carpooling with these different means of transport. Now, maybe for you to visualize what we mean when we talk about complementarity and granularity of the network, I think that slide is pretty interesting, where essentially we show on one side the number of bus stations or cities we connect with BlaBlaBus in France, and the number of pickup and drop-off points, mostly generated by machine learning on carpooling. And I think when you see that, you realize that actually you're building two very complete different networks. Like the topology of the carpooling network is highly granular. So in other way, carpooling is not very good at doing center Paris to center of Brussels. Buses and trains are good for that. Carpooling is good to go from some like suburb of Paris to a small town in Brittany. that's really good at that, because the alternative is either you drive your own car or you take a train and a bus and another train and a taxi to get there. So by combining those two, essentially, we tend to respond to two slightly different use cases on a very similar audience, which is a pretty young, price-sensitive audience. Now, the other thing that's interesting here, and going more into financial or unit economics topics, the beauty of carpooling is because we have this unique inventory. We have like a very strong captive audience and very high quality user profile. So when you use carpooling, you need to sign up, you need to give us a mobile number, you need obviously to pay online, you verify your ID, you give us your license plate of your car, and so on and so on. So we created, because you need to create trust in carpooling, we created like a very rich community. And essentially, the consequence of that is we don't buy traffic, right? The main thing on carpooling is carpooling brings free traffic for free. So if we look at most of the markets, we actually don't spend much in marketing. And that's what you see with the bar chart on the left. Actually, 87% of the traffic on BlaBlaCar and the passengers booking a carpool trip on BlaBlaCar are not paid, right? So it's quite unique to a normal OTA. Like normal OTA do depend a lot on paid marketing and SEA, and essentially they end up spending a lot of money on Google to attract traffic. We don't. So the beauty is, as we start to add actually other means of transport, starting with buses, as I just described, actually you don't change your CAC all that much, because you benefit from this very wide audience that historically was only booking carpooling, and then you start to increase your share of wallet within this audience, and they tend to come back even more because they see that you have more than carpooling. So essentially you have like a very interesting phenomenon where your LTV is improving because you increase your share of wallet per user. And in fact, even your CAC, and that's what we show here over time, we don't show the exact number because we want to keep that confidential, but you see the relative drop of the cost of acquisition per new passenger is dropping, because essentially you're better at responding at any demand, because you start to aggregate the entire market, which for us is the case in countries like France, Russia, increasingly, Ukraine as well, increasingly in Brazil. I talked about a bit about that on carpooling specifically. As you can tell, I mean, the whole story sort of, to some extent, rely on having carpooling as an element in the equation. So people often ask us, like, why don't you launch the pure bus business in some countries where you don't have carpooling? I think all the magic in terms of whether it's CAC to LTV or having all these granular trips comes from carpooling, and the fact that we created like a very strong community around carpooling. Again, the future of carpooling is also very much around technology. So over the last 2 years, and I mentioned that a bit earlier, we've been building great technology to move from, I would say, a classified business on which you bolt on a transaction-based model, which was BlaBlaCar like 3-4 years ago, to more of a machine learning play, where essentially you create another barrier to entry beyond liquidity of the marketplace, around like being smart at essentially like finding pickup and drop off along the way for drivers, and being smart about optimizing the price point at which you can find a match between the driver and a passenger. And I believe that's pretty fundamental, because as we do that, essentially it becomes extremely hard to replicate a business like that. Extremely hard, because you need millions of people with a trusted profile, which is like the first element of matching. You need to know who's in the car and feel comfortable with who you're going to share the car with. And what's something else that's powered by volume and data, which is like, what are the good pickup and drop off the area in a country, and what's the right price to match supply and demand. And again, today we slowly transformed, and it's really transparent to users. That's the beauty of it. The complexity is really integrated. But today, like 25, it's even more now than 25% of carpooling matches are purely generated by machine learning. So meaning like drivers did not plan to do this detour or pick up or drop off people in those specific location, and they did not choose the price. It's been purely computed as by a matching algorithm. So we believe that's the future of carpooling. And as we do that, we'll increase usage of carpooling. And as we do that, essentially you get this fundamental advantage over the other mean of transport, such as buses initially, and probably more as we go along. So I guess these days no presentation is complete without a COVID update. So obviously the current crisis has been bad for transport, bad for tourism. It's been a pretty rough ride in Q2 2020. Having said that, we've seen like a pretty remarkable rebound starting in June, and still today. By the way, the curve is still going up. So we are right now at like -15, -20% versus 2019 in terms of passengers transported on BlaBlaCar, and it keeps on slowly going up. And to compare that to other mean of transport, actually, buses are still, and we know that because we operate BlaBlaBus in Europe, buses tend to be 50 to 60% down on 2019. Train seem to be 30 plus to 40% down, depending on countries. And obviously air travel is like 70, 80% down. So surprisingly or not surprisingly, carpooling has rebounded extremely well out of this crisis, and still, I mean, it's still essentially sustaining those levels right now in October for several reasons. One, you don't need to think about the network. So as I said earlier, it's community based. So in June or July, when things reopened, when every company struggled thinking like, well, should we put a bus line or a train line, or should we fly planes here and there? And you don't know because the demand is unpredictable. Essentially, we had a lazy job. Like we did nothing. Drivers came back, passengers came back, and they started to book again. Like within a few weeks, we were like 60, 70% of the network was back up actually within a very short period of time. We've also seen that on the passenger side, there was a clear preference in many markets for carpooling within this audience because you minimize the number of contacts. So you had lots of passengers thinking that, well, if I need to choose between a bus or a train or a carpool, I'd rather be with 3 people in a car than 40 people or hundreds of people in a bus or a train. So, funnily enough, actually, the biggest challenge we have right now is actually making sure we can get the drivers back and get like new drivers on board. But we have too much demand actually. So the last, to give you a sense, in several markets, but I'll take France as an example. In France, actually, we are at 15% higher demand year on year versus 2019. If you are in France right now, it seems surreal. It seems surreal because trains are completely empty. The countries have shut down. But that's the point. Essentially, the fact that the other mean of transport are being depleted, actually carpool becomes like the alternative. So we see like a modal shift toward carpooling from buses. So we see like bus network are like quasi shut down. Train networks are operating, but at lower scale. So you see a transfer toward carpooling. So it's interesting for us because it's very sustainable. We don't have fixed cost in the business. So we do operate at lower volume than expected, obviously, which is not great, but it's highly resilient. And as it's going to bounce back, I mean, we all hope it's going to bounce back. I don't know when, maybe spring 21, maybe earlier. Essentially, we gained market share and we gained essentially more customers in the customer mix. So it also enables us to think a bit more like midterm and long term to 2021 and beyond, and not burn too much cash along the way while being relevant for users. So today we're one of the most relevant on this like young low cost segment. I would say we're one of the most relevant transport network in countries like France and Spain and Russia and Ukraine and Brazil. So to some extent, I would say the length of the crisis is not such a bad thing for us because it's really, the differential pain, I would say, between what we suffer and what competition is suffering is going in the right direction for us. So that's COVID. That maybe to give you a sense of where we come from and the impact of COVID. So back, I was saying that earlier in the presentation, but the run rate of the last 3 months actually pre-COVID was around 85 million passengers, growing roughly at 55% year on year. So late 19 and 20 was actually an early 20 was actually an acceleration for us. Obviously, that acceleration went down with COVID. We anticipate we'll do around 50 million passengers in 2020, obviously down on 2019. We expect, and then frankly, it's crystal ball in terms of demand, but that model assumes partial recovery in H1 and 90% recovery of overall demand in H2. And remember, like the fact we grow in 2021 is not a function of market growing. It's a function of like offline to online migration accelerating in emerging market, which we see now actually during the COVID phase. And the fact that inherently we've built actually larger market share during 2020. So the drop of 71 to 50 is not the drop you see in for bus companies or even train companies, and never mind airlines. So we believe actually because we've built a bigger relative market share during the crisis, as it comes back, actually we should be able to partially maintain in most markets that market share. So last but not least, and getting out of the COVID topic for a minute, it's always been important for us to also do something that makes sense. I mean, for us, for the employees, for the users. So as a reminder, actually, the activity in 2019 saved 1.6 million tons of CO2, sorry. And that's something that's not been like a back on the envelope calculation. We've done that with like a consulting firm actually that came and analyzed all the modal shift actually that carpooling is creating, and it has a massive positive impact, which is good in many ways. I mean, it's obviously good in the current environment. It's also like a very strong sense of purpose for many of our drivers. So if you look at the carpooling drivers, they're not professional. They're just people sharing their private space. And of course, they do that for financial reasons, but not just, right? They also do that for a deeper sense of purpose around the social benefit of meeting people and the environmental benefit of not driving alone. And that that enables, I would say, all the economics I talked about are also powered by the pretty strong brand image we created. And maybe a good proxy of that is the NPS, Net Promoter Score, of BlaBlaCar in every market is anywhere between 45 and 70 actually, which for transport is extremely high and higher than any other mean of transport. And again, that translates, that sense of purpose, the fact that people feel they're doing something that makes sense for the future, and the fact they have a fantastic experience, does translate into those economics and this better sort of unit economic side I described on the free traffic. So I'll end on that note with slightly outdated numbers, but actually not quite. They're quite good. So 22 countries, we close to 100 million members signed up, and the run rate pre-COVID was 85 million passengers on the platform. So maybe I'll stop there on the presentation if that's okay. So I chose to talk a bit about the business model initially, which I think is interesting to understand, like what's under the hood. But happy to take questions. Thanks.
Yeah, thank you, Nico. So everyone listening in, you can type your questions in the chat or the Q&A sort of products on Zoom there. But I think Björn has a question to kick off with.
Yeah, maybe we could start, with a different mix of modalities. As of now, of course, as bus is fairly new to the business, carpooling is the vast majority of in that mix. How do you see that more long term? Will it be more of an even mix between the different modalities, or what do you think?
No, it's clearly going to go with over time, like the share of buses is going to increase. So if you look at the pie chart I was showing at the beginning, that's been built in the last 12, 18 months. Essentially, it was 0 18 months ago on the platform. The BlaBlaBus business in Europe, well, has been growing pretty fast. It's more capital intensive to grow, or more operationally intensive to grow, because you need to contract bus operators and set up lines and so on. Again, even though it's highly flexible and you don't pay for buses, it's still a more incremental job. The bus marketplace business was growing like over 100% year on year pre-COVID, and even now it's positive growth actually on a year-on-year basis, even during COVID. So that segment, the I would say the non-European bus play, has the potential to be as big or bigger than carpooling in a pretty short time horizon of, I don't know, 2-3 years. I think it's a giant market, and the thing to understand actually in if you take markets like, again, like Russia, Ukraine, Brazil, and then you can extend that to other markets where we operate, like Mexico, India to some extent, there is not much online distribution actually. So in a strange way, by creating our own asset with carpooling, we were the only player having like 100% online distribution of trips. So today, in some of these markets, in most of the market, all of the market, in fact, I named, Ukraine, Russia, and Brazil specifically, BlaBlaCar is a bigger online portal than any other bus online OTA, essentially. So when we start plugging buses, it becomes, I would say, much easier for us to fill up those buses with demand, and we have much better economics in terms of CAC to LTV to a simple bus OTA. So that's the play. I think in those countries, we can actually grab a disproportionate market share of the online distribution of buses because it's non-existent. Like if you look at competition, it's not. Every time you have like a few local companies, but it's not that big, and that's part of the story, by the way, with Bus4. Bus4 had done a phenomenal job on the supply side. They had built a great technology connecting. You're building that GDS layer, this IMS layer, connecting to this very fragmented world of operators. What we really bring in is we accelerate that because we were also working on that, but we also brought in demand. And suddenly, if we inject the BlaBlaCar demand on those thousands of operators that have been connected online, you just you tap into a market that's like, well, in Russia, it's like maybe $4 to $5 billion Russia and Ukraine is maybe $4 to $5 billion of bus market. That's still 90% offline. And last but not least, the part of I would say the bad story of COVID is less people travel right now. The good story of COVID in that sense is more and more people book online. So today, the reason we see still like positive growth in markets like Russia and Ukraine, it's not because people travel more. It's because people book more online, and essentially that, at least from what we see on the platform, the offline to online effect is greater than the reduction in the temporary reduction of travel. So I'm very bullish actually on these markets because it's pretty rare that you have like a large asset class like buses in those markets that have not migrated offline to online, and clearly it's bound to happen. And we ended up with carpooling to build like free demand traffic for exactly those trips, except people do it with carpooling on BlaBlaCar. And as you add other means of transport, of course that take buses. Like in Brazil, like that's the only way you can travel essentially. Like there are no trains. So when you start plugging buses onto BlaBlaCar, those are the same. There's the same audience essentially. You're just increasing your share of wallet on that audience. So long story short is, yes, I would anticipate that, and it's hard to predict, but I would anticipate that within a few years you see as many, if not more, bus bookings than carpool bookings. The only slight caveat on that is, as we integrate more supply onto the platform, it's interesting what's happening, because we start to attract what I would call like initially bus only demand, or if you had train, it could be train only demand. And when they discover carpooling, actually they switch and they use carpooling. So in fact, actually they tend to feed each other. So the fact that you have more and more supply and you attract more demand onto the platform has the tendency to grow carpooling as well, actually. So in terms, you have this sort of like vicious cycle going on.
Thanks. A great answer. And so we have a question from the audience on the monetization and the sort of monetizing new countries. And you obviously generate new revenue without raising cost much. And
yep.
Can you cover which countries now are monetizing now, and which one are beginning to monetize or about to monetize, and what's the threshold for monetization in terms of scale or?
Yeah. So there is no I would say good timing to start monetizing. In that sense, it's very much like a classified type play, where you spend several years essentially building a C2C marketplace, making sure you essentially you are dominant as a C2C marketplace, and then over time you start monetizing. Today we are monetizing most of Europe, so most of the key markets. I mean, I would say if you relate that to volume rather than countries, actually 70% of Europe is monetized. And as of a few months ago, 0% outside of Europe was monetized, even though we have more than half of the GMV outside of Europe. Now, the reason we haven't done that actually was the growth and the scale actually we were reaching without monetizing in most of these markets was great. And it felt like essentially a better model to spend less marketing and not monetizing than monetizing early and spending more marketing. So essentially think of that as no monetization is just a marketing tool to build, to some extent, to build dominance in those markets. We started to monetize Russia just literally like a couple of months ago. The plan was to actually do that in April, but when it was technically ready in April, the country was shut down for transport. So we are starting to monetize those markets outside of Europe, and that's going to be the story of the next 12, 18 months, essentially, of between now and end of 21. We will start monetizing most of that GMV, and again progressively in those countries. And it gets pretty interesting because as you do that, you have like a mechanical sort of EBIT uplift, because essentially in these markets, all the cost is already there. Like essentially like, all the team, the marketing, the platform, I mean, all of that is already there. So essentially as we start monetizing, you have like a massive EBIT uplift in those markets that we can easily reinvest into, well, either other markets, or interestingly, we are defining that playbook between how fast you grow bus versus how quickly you monetize carpooling. And there is like a nice multimodal equation to find between carpool monetization, how aggressive you want to be in buses, and how I would say how you want to monetize the bus traffic. So we're playing with that in Russia, and there is a nice equilibrium that you can find, where it's all about monetizing everything as fast as you can. It's about finding the right equilibrium on monetizing carpool, monetizing buses, which are monetized from day one, by the way, in all the markets. And then you can tune like the right equation of growth and monetization in those markets. So that's what we're getting into right now. As essentially as we speak, we are deploying those models in Russia, and after that we deploy that in Ukraine and Brazil.
Thanks. I think on the follow up on that revenue, I think we at VNV, we've sort of we've put out there like a long-term target that BlaBla should be able to generate like €5 per passenger or member per year. And there's a question here that on that, and then that, do you think that's realistic?
Yeah, I think it is. I mean, today it's higher than that in markets like France, right? So if you look at the revenue gross margin per passenger in France, it's much higher than 5 already, right? So I mean, if you think of it in a single booking in France, we tend to make €3 on average in carpooling, even more actually. So it's between 3 and 4. Now the ticket size in emerging market is lower, so you tend to make more, because the trips tend to be around $10. You take like, even as you monetize, you tend to take like 1.5 dollar per booking of gross margin, which is more or less the same as revenue. It's 80-90% gross margin in this model. Now, as you add buses and you get more frequency, you should be able, I think, in all these markets to get around the €5 mark. So I would say globally, yes, it's very achievable. I would say almost without multimodality, but even more so as you get multimodal to get like above €5 average revenue per user per year on your active user base.
Great. There's many questions here, but so one is about the economics of connecting trains to the BlaBla platform or app.
Yeah, so it's a very good question. Essentially the commission you get or the take rate you get on train is pretty bad, right? So as the thing to think about, like you tend to, it's like few percent points that you get on trains. So if you look at that like standalone, you're aggregating trains and getting like 2, 3, 4% take rate on train. You need to sell a lot of trains to create a business. When on carpool, we take 22, 23% actually take rate on something that's on average €20. The reason it's interesting is A, it comes for free, because if you take like European markets, essentially like everyone takes the train. So essentially it's something we're not offering the audience that they're booking anyway. And B, where it gets very interesting for us and the way we think of train is combining journeys. So it's creating these unique experiences where you combine a train and a carpool. And people do that. Like when we survey people do that because when we survey the user, they tell us, but we don't even need to survey user. Actually, we know that 15 to 20% of our meeting points in France are train stations, which means people naturally combine those trips, or they try to combine those trips. As you do so, essentially, we'll start selling. Essentially, we'll attract more demand on the platform because we have trains, but mostly because they know they can find some unique combo of your train plus carpool, and then you end up selling more carpooling on the back end or the front end of a train journey. So you think of that as, if you go from Paris to, I don't know, Cassis in the French Riviera or some city like that, the best journey might be actually a high-speed rail going to Marseille and then a carpool for the last 100 or so kilometer. You'll never think of that on your own. So the platform is going to find that for you with these smart stops and the machine learning on carpooling. And by doing that, actually, that last segment is something where a driver could easily get like 15 or whatever, like €20 on the last leg, and we take 25%. So most of the value is going to be created by what we call intermodal trips, where we combine train with other means of transport. But train standalone, at least in most European market, is tricky.
Do you know like what proportion roughly today is intermodal, where someone uses first a bus and then a carpool, or a train or a carpool?
Yeah, as I said, it's about like, we see that I have to check exactly the data, but it's around like 15 to 20% of BlaBlaCar journey actually originate or end at a train station. So assuming they don't live in the train station, they probably take a train or came from a train. And then like what type of train journey is it? Just like a short leg, a long leg? Like we don't have all this information, but again, today people naturally do that, but we're not creating even the opportunity to think of that, right? So whereas if you start combining those means of transport, and again, it just, I guess if you take a step back, it just makes sense. Like what do you see when you arrive at a train station? Cars. It's just full of cars. It's just like that's how people do the last part of the journey essentially. So combining the two makes a lot of sense. Combining bus and carpool would make sense. It's less logical because a train is a bus is essentially slower than a car, so you don't have like that speed element in the bus. So I would say we see people do that, but it's a lot less interesting than train. So again, like going back to train, like it's really about combining trips at the end, and at a very basic level, well, you grab that share of wallet from passengers on your platform, and you still make like 3, 4, 5% depending on the operators on that GMV, which you will not make otherwise.
Are you monetizing BlaBlaLines, and has that sort of product line earned its raison d'etre, or is it COVID related? How can you talk about that?
So today we're growing that. So BlaBlaLines is the just to take a step back, it's the commuting app. So it's carpooling for your regular daily journeys. So going from work to your home. So BlaBlaLine was taking off like extremely well actually pre-COVID. Now it's restarting. So it's coming back on. We don't do any marketing, so it's like something. It's community based, so people just come back. It's pretty new, so it's hard to look at year on year. If you look at year on year, they look good, but it was very tiny actually a year ago. So it's restarting. It's a bit slower to restart than BlaBlaCar right now, because I think you still have a lot of people working from home right now. So it's still like the main trend is just not to go to work. In fact, I'm at the office today and I'm alone. I'm just like the empty office for me actually right now. Today we're focusing on France, and it turns out that because of, and I won't get into all the details, but because of some regulations that passed actually last year in France, actually you get a lot of subsidies from regions around short distance carpooling. So for us, the activity today is monetized by that. So we in France, it's actually a profitable standalone. It's pretty much break even / profitable as it grows. So that's kind of the beauty of it. It's not necessarily the model we deploy in every country, but it makes like a fantastic playground where essentially we being subsidized to create this great high frequency product, and now we need to decide probably for next year to start launching that in another market. And then like we need to define what's the monetization model of BlaBlaLines. But before even talking about the monetization of lines, the beauty of it, if you take a step back, is to say, if you get like the tens of millions of users we have on BlaBlaCar to actually use a product, not like once a quarter or 5, 6 times a year, which is roughly the frequency we see today for active users on BlaBlaCar, but you get them to use a product like 4 times a week. So the frequency we see on BlaBlaCar is like 4 times a week. We do like roughly, between 15 and 20 trips per month actually on lines. You have fantastic engagement of the community. So even as a product, even if you were to only lightly monetize that usage, essentially you create like an incredible captive audience. And then you can, if you don't monetize those sort of like repeat trips from home to work, you can actually monetize anything else. So today what we see is that we have 2 types of audience on lines. One is like the true carpoolers that really repeat the same pattern over and over again. And then we see passengers booking what we call a one-shot or a one-off trip actually on a BlaBlaLine journey. So essentially like your home to work, or a leg of or a portion, I should say, of your home to work might become a better Uber for someone else. And that's super interesting because we realize that those subsegment of BlaBlaLine journeys, you create like a massive network of commuters. And by doing so, actually, you just created like a phenomenal network, and some subset of this network becomes highly valuable as a short distance journey that you can highly monetize. So we're playing with that in France, and we realize that part of these journeys are highly monetizable. Some other journeys that you repeat all the time are less monetizable, but they create the massive frequency.
So there is like a follow-up question on that. That is the long-term idea to create like a BlaBla super app with where you add on other services. You've done a venture with Voi, testing that, and payments, and there's a lot, like a super app phenomenon.
Yeah, I would say yes, and the super app is actually BlaBlaCar. So we've been, in a sense that today, that's where we aggregate buses. And even though we created an independent app for commuting so that we have the technical agility and the product agility to redefine a slightly different product paradigm for commuting. Actually, everything is built so that everything can be connected through API, and all the BlaBla line trips can and will, and we're already playing with that, will be connected to BlaBlaCar. So essentially, like BlaBla line is really going to focus itself on the repeat use case of commuting, which is mostly monetized today through all kind of government schemes. There are some very strong one in France, but not only. There are many markets actually subsidizing some of that or helping some of that because they see that as public transport. I mean, it's really like a substitute to public transport in a way. But then essentially, if you connect all these trips to BlaBlaCar, you have more of a, I would say, one-off demand that would see those trips as, hey, it's a fantastic like 40-kilometer journey or whatever to go from X suburb to the city center or whatnot. And the willingness to pay for this one-off journey is extremely high. So essentially, like BlaBlaCar is built to receive every third-party, I mean, today like trains and buses from all these emerging markets, including BlaBla lines. So we see that at some point it's going to become like another supply feeder onto BlaBlaCar. And yes, we've been experimenting with Void, but that's the same idea. It's like fundamentally. And that's very experimental with Void because the booking model of e-scooter is very different from what we do traditionally. But whenever it's something you pre-book slightly in advance, you can put that on the BlaBlaCar platform. So we're rebuilding. That's part of my introduction, I guess. I mean, we went from a carpooling community to building around that community like a much larger GES and OTA layer when you can connect actually all type of supply.
Great. I know we started a little late, but hopefully we'll have time for maybe one more question. And I think there are several questions around geographical expansion beyond the countries you are today, and especially with an emphasis on China and why we're not there, and then maybe the US also, and then most importantly, why you're not in Sweden.
So maybe, I mean, like broad answer on that. We had like a big phase of geo expansion where we went from like essentially 1 to 22 countries between 2012 and essentially 2016. As you can tell from the presentation and the discussion, the focus right now is mostly on product expansion and building that multimodal play. So I would say we want to demonstrate that at scale in several markets. Some in Europe. I mean, France is obviously a great playground for us, but also Russia, Ukraine, Brazil. I think once we have that, it would make tons of sense actually to go back. So I don't know if it's like a year down the road or two, but it's not. I mean, hopefully it's not like 5 or 10. Then you have this new playbook of, okay, you can enter a market with carpooling plus buses. And then, yes, you would think of Asia, you would think about the rest of Latam, you would think about some countries in Africa. After that, specifically on the two giants there, or the three giants there, Sweden, China, and the US. But in terms of big markets, I mean, China, we never really looked at China. I'd love to get some intelligence on that, but it feels pretty hard to create to create a business like that in China. When you looked at how the like of Uber and many other pure C2C or B2C marketplaces have struggled existing in China. To some extent, Didi is doing or was trying to do more or less what we do. So it feels the competitive landscape in China is a bit scary, right? And the amount of effort and capital you need to put to exist in China, it feels like today at our scale, probably an unreasonable risk. It doesn't mean there is no market. I believe there is probably a market. It feels pretty hard for us to crack, and I think we have like we demonstrated there are lots of other larger markets where we can build BlaBlaCar and the bus marketplace business with a lot less competition. US is different in a sense that the model of carpooling as we do it has never taken off. I mean, for all kind of reasons, ranging from cost of motoring is very low. The car insurance framework is complex, and essentially, like if you take a passenger that pays for a journey, even if you don't make a profit, you could have some issue if you have an insurance, which you're a lot less protected than in most European countries. And last but not least, there is no good public transport, so it means like finding the right, or I should say, the level of liquidity you would need in the marketplace, so that your pickup and drop-off point are relevant for users, because they cannot take like a tube or a tram or anything to get to the meeting point, would be enormous. So it's been tried. A company like Lyft actually started as Zimride, which was the BlaBlaCar of the US. I've always talked to John and Logan, actually the founders of Lyft, and again, before that, Zimride. And that was the analysis as well, that it was really tricky to crack the liquidity problem in a country like the US, where you have no first mile and last mile solution without a car, because you ask the drivers to become taxi driver, and it's really tricky in that model. So today, I guess we've been proven right to some extent not to go there. I mean, because no one has done it, and I think it's hard to crack still today as a market. So there might be an opportunity in the Northeast area, where I think the density and it probably makes more sense. Maybe we'll do that one day. I would say right now it's not top of the list in terms of things to do for the next couple of years.
Great. Well, thank you. I think we have lots of other questions, but I think we've taken so much of your time, and thank you for being so generous with it and answering candidly on all these questions. And with the questions that we haven't answered, we'll try to follow up ourselves with that. But everyone, thank you so much, and Nico, especially a big thanks to you.
Thank you. Thanks. Bye.
Bye.